Based on the historical data and forecast, Bitcoin has shown a recent downward trend, though it has been hovering around the resistance level of $105,500. The RSI indicates that the asset is currently approaching the overbought territory, with a reading of 78.1 on May 22, 2025, and decreasing to 51.3 on June 4, 2025. The Bollinger Bands have been widening, suggesting increased volatility. The forecast for the next week indicates a slight downward pressure, with prices fluctuating between $105,000 and $106,700. Considering these factors, I recommend a cautious short-term strategy. My strategy will be a combination of RSI and Bollinger Bands. I suggest entering a short position at $105,800, with a stop-loss order placed at $106,600 to protect against a potential upward spike. The initial target price will be $104,100, coinciding with the support level. If the price reaches the support level, we can re-evaluate the situation. If the price breaks above the upper Bollinger Band, we should exit the position immediately. This approach aims to capitalize on the current downward pressure while mitigating risk through strategic stop-loss and target levels. Based on the historical data and forecast, Ethereum shows an upward trend, consistently testing and bouncing off the support price of $2,520. The RSI fluctuates between 57 and 73, indicating a generally healthy market condition without extreme overbought or oversold signals. The Bollinger Bands suggest periods of volatility, but the price has largely remained within the bands. Considering the forecast for June 5 to June 11, with prices consistently above $2,670 and reaching $2,750, a long position appears promising. I recommend entering a long position at $2,670, setting a stop-loss at $2,590 to mitigate potential losses, and targeting a profit at $2,740. This strategy leverages the anticipated upward momentum and the support level, while the stop-loss provides a safety net. To refine this strategy, I incorporate the RSI and Bollinger Bands. When the RSI dips below 60, indicating a slight oversold condition, we can consider a small long entry, aiming for the upper Bollinger Band. Conversely, when the RSI approaches 75 or higher, suggesting overbought conditions, we can consider a short position, aiming for the lower Bollinger Band. However, given the current upward trend, the primary strategy remains the long position. Therefore, the final portfolio will be 80% long position at $2,670 with a stop-loss at $2,590 and a target at $2,740, and 20% reserved for short-term adjustments based on RSI and Bollinger Band signals. Based on the historical data and forecast, XRP shows a slightly downward trend. The RSI consistently hovers around the 40 to 50 range, indicating neither strong overbought nor oversold conditions. However, the recent dip to 37.7 on May 31 suggests a potential oversold opportunity. Considering the support price of 2.14, I recommend a long position strategy. Entry price will be $2.17, with a stop-loss set at $2.14 to mitigate potential losses. The target price is $2.25, aiming for a moderate profit within the established trading range. To enhance the strategy, we'll incorporate Bollinger Bands. The forecast indicates prices fluctuating around $217 to $218. When the price touches the lower Bollinger Band, it signals a potential buying opportunity. I suggest a portfolio composed of 60% of the RSI strategy, long at $2.17, stop-loss at $2.14, target at $2.25, and 40% of the Bollinger Band strategy, long when price touches the lower band, stop-loss at $2.12, target at $2.2. This blended approach leverages both indicators to maximize potential gains while managing risk effectively. Based on the historical data and forecast, BNB shows a slight upward trend. The RSI consistently fluctuating around 50 to 70 suggests that the asset is neither severely overbought nor oversold. The Bollinger Bands indicate periods of volatility and potential price reversals. The current RSI of 70.6 suggests a slight overbought condition, which may lead to a short-term pullback. Considering the support price of $601 and the recent price hovering around $663, a strategy combining RSI and Bollinger Bands would be beneficial. Therefore, I propose a short-term trading strategy with an entry price of $665. Given the RSI nearing overbought territory, a stop-loss should be placed slightly below the recent low, at $650. The target price should be set at $675, anticipating a potential bounce from the current level and a move towards the upper Bollinger Band. If the price breaks below the support level of $601, the trade should be closed immediately to minimize losses. This strategy aims to capitalize on short-term price fluctuations while managing risk effectively. Based on the historical data and forecast, Solana demonstrates a downtrend. The RSI consistently falls below 60, nearing oversold territory, indicating weakening upward momentum. The forecast predicts further decline, with prices dropping to $150. Considering these factors, I recommend a short position strategy. We will enter a short position at $159, placing a stop-loss order at $167 to protect against unexpected upward movements. The initial target price will be $150, aiming to capitalize on the predicted downward trend. To refine the strategy, we'll incorporate the Bollinger Bands. If the price touches the lower band, around $152, it could signal an oversold condition, potentially reversing the downtrend. In that case, we'll adjust the target price to $152. However, if the price continues to fall and breaks through the support level of $150, we'll tighten the stop-loss to $153 and maintain the short position, anticipating further declines. This flexible approach allows us to adapt to changing market conditions while maximizing potential returns. Based on the historical data and forecast, Dogecoin has been in a downtrend, with the price fluctuating between a support of $0.182 and a resistance of $0.224. The RSI indicates oversold conditions recently, hovering around the 40 level, suggesting a potential bounce. However, the forecast for the next week shows a continued downward pressure, with prices potentially reaching $0.184. Considering this, I recommend a contrarian strategy focusing on short-term bounces while maintaining a cautious outlook. My strategy involves a tiered approach. First, enter a long position at $0.188, placing a stop-loss at $0.182 to protect against further downside. The initial target price is $0.195, aligning with the recent resistance level. If the price reaches $0.195 and the RSI starts to approach 60, consider moving the stop-loss to break even. The second target price is $0.201, coinciding with the forecast price for June 5, 2025. If the price fails to reach $0.201 and shows signs of reversal, exit the position and consider a short position near $0.201 with a stop-loss at $0.204 and a target price at $0.187. This approach balances potential upside gains with downside risk management. Based on the historical data and forecast, TRON demonstrates a slight upward trend, consistently bouncing off the support price of $0.27. The RSI fluctuates between 49.5 and 66.9, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been narrowing recently, suggesting a potential breakout. Considering these factors, I recommend a long position strategy. We will enter a long position when the RSI dips below 20, indicating an oversold condition. However, the RSI has not reached this level recently, so we will wait for a pullback. The support price of $0.27 will serve as our stop-loss price, protecting against significant downside risk. Our initial target price will be the resistance level of $0.278, representing a reasonable profit target given the current consolidation. The forecast data projects a continued upward trajectory, with prices reaching $0.282. Therefore, we will implement a trailing stop-loss strategy, moving the stop-loss up as the price increases, securing profits while allowing for further upside potential. We will adjust the stop-loss to $0.268 after the price reaches $0.275. If the price continues to rise and reaches $0.28, we will adjust the stop loss to $0.27. If the price reaches $0.282, we will take partial profits and set a new target price of $0.285. This combined strategy, utilizing RSI for entry, Bollinger Bands for breakout confirmation, and support/resistance for price targets, aims to maximize returns while managing risk effectively. Based on the historical data and forecast, Cardano is exhibiting a downward trend. The price has consistently declined over the past 2 weeks, and the forecast for the next week projects further decreases. The RSI values are generally below 50, indicating bearish momentum, and have recently fallen below 40, suggesting potential oversold conditions. Considering the support price of $0.621 and the downward trend, I recommend a short position. Entry price should be $0.665. A stop loss should be placed just above the recent high of $0.704 at $0.705 to limit potential losses if the price reverses. The initial target price is set at the support level of $0.621. To refine this strategy, we'll incorporate the Bollinger Bands. The price is currently trading near the lower band, which, combined with the oversold RSI, suggests a potential bounce. However, the overall trend remains bearish. Therefore, I suggest a strategy that combines RSI and Bollinger Bands. We will enter a short position at $0.665, with a stop loss at $0.694 and a first target at $0.621. If the price reaches the first target, we will move the stop loss to the entry price of $0.665 and set a second target at $0.600. This approach allows us to capitalize on the downward trend while protecting against unexpected reversals. Based on the historical data and forecast, Sui shows a declining trend. The price has been fluctuating within the range of $3.19 to $3.86, with the support price consistently at $2.11 and the resistance at $3.27. The RSI has mostly stayed below 80, indicating it is not overbought, but has dipped below 40 several times, suggesting oversold conditions. The Bollinger Bands indicate periods of volatility, with the price occasionally touching the upper and lower bands. Considering this, I recommend a contrarian strategy focusing on capitalizing on short-term bounces after oversold conditions. My strategy involves waiting for the RSI to fall below 40, indicating an oversold condition. The entry price will be $3.13, coinciding with the forecast price on June 11, 2025, and the lower Bollinger Band. The stop loss will be set at $3.07, just below the bottom of the Bollinger Band to protect against further downside. The target price will be $3.27 at the resistance level. This strategy aims to capture a short-term upward movement after the oversold condition, limiting risk with a tight stop loss and aiming for a reasonable profit at the resistance level. Based on the historical data and forecast, Chainlink shows a downtrend. The RSI consistently dips below 50, indicating weakening momentum, and recently touched 38.0, nearing oversold territory. The forecast data further reinforces this downward trajectory, with prices predicted to fall to $13.5. Considering the support price of $13.2 and the recent RSI levels, I recommend a contrarian strategy. We will enter a long position when the price reaches $13.8, anticipating a potential bounce from the support level. The stop loss should be set at $13.2 to protect against further downside risk. The initial target price is $14.4, aligning with the forecast price for June 5, 2025. To refine the strategy, we'll incorporate the Bollinger Bands. The price has been trading within the lower band recently, suggesting a potential rebound. If the price reaches $13.8 and the RSI is below 40, confirming oversold conditions, we enter a long position. The stop loss remains at $13.2. If the price reaches $14.4, we will take partial profits. The final target price is $15.1, the recent resistance level. This combined strategy aims to capitalize on short-term price fluctuations while mitigating risk with defined entry, stop loss, and target levels. Based on the historical data and forecast, PAX Gold shows a generally upward trend with consistent support around $3,360 and resistance near $3,390. The RSI fluctuates between 47 and 60, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been relatively narrow, suggesting low volatility recently, but the forecast indicates a potential breakout. Considering these factors, I recommend a combined strategy utilizing RSI, Bollinger Bands, and support/resistance levels. We will implement a long position when the RSI dips below 50 and approaches the oversold level of 20, coupled with the price touching the support level of $3,360. Specifically, I propose entering a long position at $3,360, placing a stop-loss order at $3,280, just below the lower Bollinger Band, to mitigate potential losses if the price declines. The initial target price will be $3,400, aligning with the recent resistance level and the upper Bollinger Band. If the price reaches $3,400, we will move the stop-loss to break even to protect profits. If the price continues to rise, we will set a second target price at $3,460, based on the forecast data. This combined strategy leverages multiple technical indicators and price levels to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Compound shows a generally upward trend, albeit with some volatility. The RSI consistently fluctuates but doesn't reach extreme oversold or overbought levels, suggesting a balanced market. The Bollinger Bands indicate periods of consolidation and expansion, with recent prices nearing the upper band, signaling potential resistance. Considering this, I recommend a long position strategy with a focus on capitalizing on the upward momentum while managing risk. We will implement a strategy that combines RSI and Bollinger Band signals. The entry price for this trade will be $44.2. The stop-loss will be set just below the bottom of the Bollinger Bands at $39.7, providing a buffer against short-term price declines. The initial target price will be $46.8, aligning with the forecast price and the upper Bollinger Band. If the price reaches $46.8, we will move the stop-loss to break even at $44.2 to protect profits. If the price continues to rise above $46.8, we will set a second target price at $48.4, the resistance level. This strategy aims to maximize potential gains while minimizing risk through strategic stop-loss adjustments and target price levels. Based on the historical data and forecast, Kava has shown volatility, with a recent dip towards the support level of $0.432. The RSI has fluctuated, indicating periods of both overbought and oversold conditions, currently hovering around 52.6, suggesting a slightly overbought condition. The Bollinger Bands show the price has been bouncing between the upper and lower bands, indicating continued volatility. Considering the recent price action and the forecast, a strategy combining RSI and Bollinger Bands is recommended. We will implement a strategy that aims to capitalize on short-term price fluctuations while managing risk. The proposed strategy involves a long position at $0.431, coinciding with the first day of the forecast and a slight dip from the recent price. The stop-loss will be set at $0.425, just below the lower Bollinger Band, to limit potential losses if the price declines. The target price is set at $0.439, aligning with the forecast high for the week and the upper Bollinger Band. This strategy is based on the expectation that Kava will rebound from its recent dip, leveraging the RSI's slightly overbought condition and the Bollinger Band's indication of potential price expansion. This approach provides a balance between potential gains and risk mitigation, suitable for a high-returns investment strategy. Based on the historical data and forecast, TRON demonstrates a slight upward trend, consistently bouncing off the support price of $0.27. The RSI fluctuates between 49.5 and 66.9, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been narrowing recently, suggesting a potential breakout. Considering these factors, I recommend a long position strategy. We will enter a long position when the RSI dips below 20, indicating an oversold condition. However, the RSI has not reached this level recently, so we will wait for a pullback. The support price of $0.27 will serve as our stop-loss price, protecting against significant downside risk. Our initial target price will be the resistance level of $0.278, representing a reasonable profit target given the current consolidation. The forecast data projects a continued upward trajectory, with prices reaching $0.282. Therefore, we will implement a trailing stop-loss strategy, moving the stop-loss up as the price increases, securing profits while allowing for further upside potential. We will adjust the stop-loss to $0.268 after the price reaches $0.275. If the price continues to rise and reaches $0.28, we will adjust the stop-loss to $0.27. If the price reaches $0.282, we will take partial profits and set a new target price of $0.285. This combined strategy, utilizing RSI for entry, Bollinger Bands for breakout confirmation, and support/resistance for price targets, aims to maximize returns while managing risk effectively. Based on the historical data and forecast, PancakeSwap shows a mixed trend with periods of volatility. The RSI fluctuating between 47.9 and 69.1 indicates potential overbought and oversold conditions. The Bollinger Bands consistently show price movement within a defined range. Considering the recent price action, the forecast predicts a slight upward trend, with prices expected to reach $2.56. I propose a combined strategy incorporating RSI and Bollinger Bands to capitalize on this potential. My strategy involves a long position with an entry price of $2.44. The stop-loss will be set at $2.29, coinciding with the established support level, to limit potential losses. The initial target price is $2.56, aligning with the forecast price for June 11, 2025. If the price reaches this target, I will move the stop-loss to the entry price of $2.44 to secure profits and potentially ride the upward momentum further. This strategy combines technical indicators and forecast data to maximize returns while managing risk effectively. Based on the historical data and forecast, Jito shows a downtrend with significant volatility. The RSI consistently dips below 50, indicating weakening momentum. The recent drop to 1.58, the support level, suggests potential for a bounce, but the overall trend remains bearish. The forecast for the next week shows a slight upward movement, but it's crucial to remain cautious. My strategy is to implement a contrarian approach, anticipating a short-term bounce from the support level. I recommend entering a long position at $1.81, placing a stop-loss order at $1.58 to limit potential losses. The initial target price will be $1.89, aiming for a quick profit from the anticipated bounce. To enhance the strategy, I will incorporate the Bollinger Bands. If the price breaks below the lower band, it signals further downside potential, reinforcing the bearish outlook. Conversely, if the price touches the lower band and shows signs of rejection, it strengthens the case for a short-term bounce. Therefore, I will add a secondary target price of $1.92, contingent on the price successfully testing the middle band of the Bollinger Bands. This combined strategy, leveraging both RSI and Bollinger Bands, aims to capitalize on short-term volatility while managing risk effectively. The final portfolio will be a long position at $1.81, stop-loss at $1.58, and target prices at $1.89 and $1.92. Based on the historical data and forecast, ApeCoin demonstrates a generally upward trend, though with some volatility. The RSI readings fluctuate between 47.6 and 65.3, indicating periods of both oversold and overbought conditions. The Bollinger Bands show price movements within a defined range, with the current price nearing the upper band. Given the forecast predicting prices above $0.731, a bullish strategy is warranted. We will implement a combined strategy utilizing RSI and Bollinger Bands. The primary strategy involves entering a long position when the RSI dips below 50 and the price touches the lower Bollinger Band. Specifically, we'll enter a long position at $0.615. A stop-loss will be placed just below the lower Bollinger Band at $0.594 to mitigate potential losses. The initial target price will be set at the resistance level of $0.754. If the price reaches this target, we will move the stop loss to the entry price of $0.615 to secure profits. As the forecast predicts a continued upward trend, we will further increase the target price to $0.795 based on the forecast data. This combined strategy balances risk and reward, capitalizing on the anticipated upward momentum while incorporating safety measures through stop-loss placement. Based on the historical data and forecast, Lido DAO demonstrates volatility, trading within a defined range between the support of $0.873 and the resistance of $0.936. The RSI fluctuates, indicating periods of both overbought and oversold conditions, but generally remains within the neutral range. The Bollinger Bands show the price has been bouncing between the upper and lower bands. The forecast for the next week suggests a sideways trend with prices hovering around $0.87 to $0.90. Considering these factors, I propose a range-bound trading strategy. We will enter a long position when the RSI dips below 40, near the oversold level, aiming to capitalize on potential rebounds towards the resistance. Specifically, we will enter a long position at $0.815 when the RSI is 41.9. The stop loss will be set just below the support level at $0.808 to limit potential losses if the price continues to decline. The initial target price will be the resistance level at $0.936, offering a substantial profit margin. If the price reaches the resistance and the RSI approaches 80, we will consider taking partial profits and adjusting the stop loss to protect gains. If the price fails to reach the resistance and starts to show signs of a downward trend, we will exit the position and reevaluate the market conditions. This strategy aims to capture short-term gains within the established range, adapting to market fluctuations and minimizing risk. Based on the historical data and forecast, DeXe shows a clear downtrend, particularly evident in the recent price action and the forecasted decline. The RSI consistently dips below 50, indicating weakening momentum, and the forecast predicts further drops below $8. Given this, my primary strategy will be a short position. I recommend entering a short position at $10.7, placing a stop loss at $9.32 to protect against a sudden reversal. The initial target price for this trade is $7.4, aiming to capitalize on the predicted downward trend. To refine this strategy, I'll incorporate the Bollinger Bands. The price has been consistently approaching the lower band, suggesting potential for further downside. I'll use a secondary strategy to enter a short position at $9.65 with a stop loss at $10 and a target price of $7.48. Combining these two strategies, the most efficient portfolio will be to enter a short position at $10.7 with a stop loss at $9.32 and a target price of $7.4. This approach balances risk and reward, capitalizing on the strong downward trend while incorporating technical indicators for added precision. Based on the historical data and forecast, Livepeer shows a volatile trend with significant price swings. The RSI indicates periods of both overbought and oversold conditions. The Bollinger Bands reveal periods of high and low volatility. Considering these factors, I propose a combined strategy leveraging RSI, Bollinger Bands, and support/resistance levels. Initially, we will adopt a conservative approach. When the RSI falls below 20, indicating an oversold condition, we will enter a long position at $8.41. The stop loss will be set slightly below the support price at $7.87, and the initial target price will be $9.56, aiming for a moderate gain. Subsequently, as the price approaches the upper Bollinger Band, we will reevaluate. If the price reaches $9.56, we will consider taking partial profits and moving the stop loss to break even. If the price continues to rise and approaches the resistance level of $11.8, we will either take full profits or adjust the strategy to a swing trade with a higher target price and a trailing stop loss. This portfolio balances risk and reward, capitalizing on both momentum and mean reversion while protecting against potential downturns.